All right, so like we discussed earlier in the beginners class, we discussed forex. Now we all know currency pairs. We all know what is forex, currency pairs, trending range, and everything we know. Now we all know what we do in forex, right? Simple as that. We buy and sell. That's basically what we do in forex. We are buying and selling currencies, stocks, indices, gold, oil, and so on and so forth. So like basically that is what we do in forex, buying and selling. Now, when do we buy and when do we sell? Let's take currency pair for example. We buy a particular currency pair when you know that currency pair will rise, and then we sell a particular currency pair when you know that currency pair will what? Will fall. That's as simple, right? Yeah, it's so simple. But the big question here is, when will it rise and when will it fall for you to be able to buy and sell simultaneously? That is the big question. So this evening, this is what we're going to discuss. We have various analytical tools that is going to help us determine when to buy or where to buy or where to sell. So stay tuned as I'll walk you through step by step. So we'll start from the basic ones, then we'll keep building it day by day as time goes. Okay, so let's kick off. So let's start with the basics one today, which is support and resistance. All right, so support and resistance are one of the analytical tools used in determining the possible direction of the market. So like support and resistance, on the other hand, they are strong pillars where market reverses, or they are strong pillars that either push trending markets back to an opposite direction. Don't worry, I'm going to explain it for us to understand. So let's see. Let me give you an example of a trending market. When we say market is trending, meaning it is moving up, down, up, down, up, down, up, down, creating some form of higher high, higher low, higher high, higher low, like that. When you see a market moving in that form of direction, we term that market as an uptrend market. Uptrend. Sorry, don't mind my spellings. Uptrend market. So on the other hand, whenever you see a market moving slowly downward like this, creating a lower low, we term such markets as a downtrend market. Downtrend market. So you see, so this is an uptrend, this is a downtrend. All right, so also you can also have a market without a direction. That means it will be moving zigzag like this, neither going up or down. We term that market as a ranging market. Ranging markets. As a ranging market. I hope you all know this. Yeah, so this is just a recap. So this is an uptrend, this is a downtrend, and then this is a ranging market. So anytime a market is moving up, there's always this point that normally pushes back the markets back to its previous move, or opposite its previous move, which is the downside. And that area or level or point is what we term as the resistance point or the resistance levels. Same thing, market is trending down and there's an area that normally pushes market back up or opposite its previous trend. That level or that point is what is termed as the support. Okay, let me clean it and give you an example. So let's take an example. So let's say we have a market which was trending up like this, suddenly find a resistance level that pushed the market back down at a level, it meets another support level which push price up again, meet another resistance that push market down, up, down. So you see, so these levels, let me change the color. So those levels or those points, those levels or points are what we describe as our support and resistance. So the one above is always the resistance and the one below is the support. Or in the other hand, the one that normally push markets downwards is the resistance, and the one that pushes market upward is the what? Support. So this is just a simple illustration for you to understand. Let me make it more clearer here. Something like this. So this level is our resistance level. Resistance. And here is our support level. Okay, so that is it. So as you can see, whenever market is trending up, hits that resistance level, it bounce back again. Whenever it hit that support level, it goes up. When it hit that resistance level, it bounce back. Hit a support level, it goes up. Resistance, it comes back. Supports, goes back. Resistance, it bounce back. So that is how support and resistance. So like they serve as the turning point of the market. See, turning point of the market. That is the support and resistance level. Let me see if you can go through the normal charts. Have a feel of it. I think that will be okay. Okay, so have a feel of this is CAT JPY 4-hour time frame on the normal charts. So this level acted as a level of what? Resistance. You see, pushed market down. Market came back again. Same level, push it down. Market tried to draw closer. It pushed it down, closer, down. Hit that level, down. So that is basically what it is. So that level is what we term as the what? The resistance level. And then here too, as you can see, push market up, up, up. So this is the support level. Let me see. I have another example. You see this level acted as a level of what? Resistance. This also acts as a level of what? Support. See, whenever market was trending downward, came and find a support here. Came and find a support level here. It bounced back. Another support level. Market bounced back. Another level. Market bounced back, and so on and so forth. That is the same. So this makes the level support. Here too, market was trending upward, find a resistance level, it bounced back, resistance, tried to break the resistance, but it wasn't successful, still bounced market back, same level, bounce back, same level, bounce back. and so on and so forth. So that is the same thing that is happening here over and over. So we term this level as what? Our what? Resistance level. You see, as you can see, I'm not saying the support or resistance, they are points. I'm trying to consider them as zones or levels where it will at least cover some range of place, such that maybe it won't be like a particular point where whenever market gets there, it will bounce back. That sometimes it may go beyond or above it. So let me see if I can get another example here for you. Okay, so this is another example of a resistance. See, resistance, resistance, support, support, support. See, resistance down, resistance down, resistance down. See, support up, support up, support up. So that's basically what it is. So resistance always push market, an uptrend market down, support push a downtrend market up. So this is just to illustrate to you how it's been drawn on the chart. We can draw it. You can draw using the. You can draw it with a horizontal line. You can join them with horizontal line, or a rectangle that will fill all the levels and make the place more or less like a zone that serves as a turning point of the market. It's okay. Let's move back to our drawing board. Okay, so that is it. So now, the big question is, how do we take advantage of this bounce back, up, back, and down? How do you take advantage of it? It's very simple. We buy whenever markets bounce off a support. We sell whenever market bounce off a resistance. So market was trending upward, meet a resistance, bounced off. When it is coming back, we sell. Market goes our direction, we take our profit at the nearest support level. Same thing happened here. Market came here. We knew from our concept of support and resistance that this place is serving as a turning point of the market, so that whenever market gets there, there's a high possibility it will go the opposite direction. So here we buy, here we sell. We can buy here, we sell. We buy here, we sell. We buy here, we sell. So that is how simple it is. However, maybe for you to be able to know whether this is going to bounce off that level is the problem. And don't worry, as we proceed, I'll solve the problem. We couple this analysis with other strategies to be able to find out whether this market is going to trend more up or it will bounce off that level. So don't worry, I'll take you through that one. For now, just understand after every bounce, you sell at a resistance and then you buy at a support. Let's go to the real chart so you can have a feel of it. Okay, so the real chart, this is how it is. So this is a support, right? So this is a support, right? We buy at a support, sell at a resistance, buy at a support, sell at resistance, buy at support. So market bounce off a support, we buy. Market bounce off another support, we buy. When it's getting to a resistance level, then we take our profits. Came here, we what? We sell. I'll take profit to the nearest resistance level. This is basically the concept of support and resistance using the bounce method. Okay, fine. Let me see the other example. Check this one too. See, you buy at this level you buy, here you sell, here buy, sell. So buy and sell. So that is how it is. However, like I told you, the problem here is for you to know whether it will bounce off or it will break that level. That is the problem. But don't worry, as we proceed, I'll take you through that one too, for you to be able to know whether, okay, looking at the pattern here, this thing will bounce off this level. Oh no, the candlestick is telling me no, there's a reversal candlesticks around this level. Okay, once I see an engulfing candlesticks around that level, signifying no, there's a high possibility of a reversal. I take the trade after the engulfing candle or pin bar or something of that nature. So don't worry, you'll get there, and there are a couple of chart patterns and other technical tools I'll introduce you to, which will help you do that. So for now, just grab the concept and let's move on. All right, so that's basically the bounce method. That's basically the bounce method. So the one we just saw was the bounce method. Bounce method. Whenever market bounce off a resistance, you sell, bounce off a support, you buy. So now we also have another one known as the breakout method, right? We also have another one known as the breakout method. That is the one we'll be looking at now. Okay, fine. So remember, support and resistance, although are strong pillars that act as a turning point of the market, but they can't hold forever. That is the truth. Sometimes they may hold for some consistent level of time. One day, one way, one how, somehow it will be broken. So markets will one day break through a support or a resistance level. Remember, when market breaks through a support or a resistance level, your bounce method is being invalidated. So does that mean that you should ignore the trade now? No. You should take advantage of the breakout method, which is what I'm going to teach you now. For now, let me erase this and let's see something. Okay, so market was trending up, down, up, down. You have your supports, your resistance level, drawn, your supports, drawn. So you were around here, market was coming. You were around here waiting for market to hit this level. Remember, this is a resistance level. That's as a turning point of the market. You're waiting for the market to turn around this level so you can sell and make some profit. Unfortunately, market gets there, boom, started going up more and more and more again. This is what we mean by the breakouts. Instead of the bounce, it's rather break through the resistance level. Come here. Sorry. Okay, so let's take scenario of a downtrend. Market moving down. You were here waiting for a market to bounce off this support level so you can buy, but it didn't. Before you realize, boom, market started falling more. What happened here is the breakout. Market broke through this support level and started falling. So instead of you to ignore the trade, just ignore the bounce method and then take advantage of the breakout. Okay, now I'll teach you how to take advantage of this breakout. Now this is what normally happens. Market goes, come up. Now this is what normally happens when breakouts occur. Market broke a resistance level. Before you realize, market has broken that level. If you are lucky, fair enough to catch it around this level, fair enough. But if you are not lucky, this is what happened. Before you realize, it has started moving. So all you do is to wait for what we call a retest or pullback to that same resistance. Now, instead of a resistance, this resistance has now become a new support. Now it is going to act as a level of support. Support usually push markets up to buy. So after the breakout, you always wait for a pullback or a retest to the resistance, which will now become a new support. You buy. After it bounces off that new support, the market will go like this. This is what usually happens. Like almost about 90% of the market, after a breakout, comes back for a retest. You take your trade, stop loss below it, you take profits at the next resistance or support level. So that is it. Let me take the scenario of a downtrend. So markets trending down, came, breakthrough, support level, came back for a retest or pullback, or what my students term as the case method. Case a support. Now this support, whenever a support is being broken, it will now become a new resistance. Resistance always push market down, right? So you sell around this level. Markets goes like this. Your stop loss below it, above it, market will go your direction. Okay, so let me move to the real chart. Maybe it will be clearer there. Good. Okay, so let's see this market. This is USD card on a daily time frame. I drew my level of resistance by joining this point together. 1, 2, 3 together. I drew my supports 1, 2, 3, 4 together. So market was trending upward, came back up to the resistance, came back to supports. Here I sell, here I buy, I sell around here, waiting for it to bounce here, came here, I was here waiting for it to bounce for me to sell again. Unfortunately, market started trending up. It broke through the resistance. As an experienced trader who has been taught pullback or retest strategy, I wait for a market to retest it. Came back here, didn't retest. Came back here, you see, it tested the market. Now this level has now become a support. I'll buy my pair here. My stop loss below it, take profit above it. Boom, market goes my favor. Take my profit, cash out some money. So that is how you see how simple it is. That is how simple it is. See, breakouts, retest, take my trade, raise something small, just in case it was a fake breakout, to come back and hit my stop loss and take the trade. Something small. My reward, very big. That is it. Let's take another instance. So this is another trade, almost the same thing. This is almost the same thing. Support, breakouts, retests, boom. See how market goes. That is how it is. Okay, let's take a scenario of a downtrend. So this was a downtrend. Market was trending down, came to a level of support, bounced up, support, bounce down, resistance, bounce down, support, came here. Now this support was broken. The market passed through the breakthrough the support level, came here for a retest. I do what? I sell. Why am I selling? Because this support is now a resistance. After the retest, resistance always push market way down. See, place my sell order, stop loss above it. Boom, market to my direction. take my profit. So that is how it is. See, that is the example for breakout through the down. Let me see if I can get another. This is another example. You see, so this one too, same concept, same concept. What happened here? For here, markets came for a retest because markets break through here with this small candle, came back for a retest with a bullish candle. You see, before trending downward. It's not always you see the markets breaking through, coming for a retest like that, and then go. Sometimes even with a single candlestick, market will close like this below the support or resistance. Then a bullish candle will come here for a retest, then a bearish candle will now come and then complete the breakouts. So that is it. So take your time and scroll through the chart. You see a lot of them. This is just an example for you to take advantage. So okay, so I will mute you guys. If there's any other question, you ask me and then I'll explain it for you to understand. So this is just the basics. And even with this, you can do something.